Hi traders, you're welcome to the Forex Geek channel. If you are already subscribed to this channel, then you are doing well. If you are not yet subscribed, I don't know what you're waiting for. But we cover a lot of insightful topics in this channel. So if you're not yet subscribed, then maybe you can consider doing that now. Without further ado, we are going to be looking at a very important topic, and that is the Bollinger Bands breakout strategy. Now, there are a lot of traders that use Bollinger Bands. Some traders use the Bollinger Bands because of the volatility that the indicator gives. There are some traders that prefer to use the Bollinger Bands, just as a confirmation tool, and some traders use the Bollinger Bands with respect to breakout. And in this video, we are going to be looking at the breakout strategy with the Bollinger Bands. Okay, to be specific, it's the Bollinger Bands breakout strategy that we are looking at. All right, so I'm just going to add on the Bollinger Bands to the chart. All right, here you go, and then let us jump right in. First off, let's talk about what Bollinger Bands are. Now, this indicator was created by John Bollinger. Okay, and the Bollinger Bands consists of a middle line, which is a simple moving average, and then it also has two outer bands, the upper band and the lower band. Okay, now this upper band and lower band are set to they are set two standard deviations away from the moving average. Okay, as we can see, let us go to the settings. Can we see the deviations here is set to 2? This is the default settings. If you want to modify it, you can modify it according to your taste. Okay, you can actually modify it, but the default setting is set to 2. So while the moving average, the simple moving average, is set to period 20 in the default settings, the upper band and Bollinger Bands are set to two standard deviations actually from the SMA. Okay, so that's the default settings. Now this creates a range that adapts to market volatility. So these bands, they help traders identify potential price levels for entries and exits. Now, when the price moves close to the upper band, it may indicate that the asset is overbought. All right, as we can see that we had multiple rejections when price got to the upper band. As you can see, when price got to the upper band here, you see that we had a pullback. Here again, we had a pullback. Here again, we had a pullback. Can we see? Here again, we can see we had a pullback. So basically, the upper band is serving as a resistance, a dynamic resistance. Then the lower band is serving as a dynamic support. So basically, that is how it works. Okay, so when price gets towards the upper band, it shows that the price is potentially overbought. All right, and when price gets to the lower band, it shows that the price is potentially oversold. Okay, or the asset is overbought and oversold respectively. All right. Now, let's get to the crux of today's video, the breakout strategy. A breakout occurs when the price moves beyond the upper or lower band. Okay, so when you have price moving beyond, that's when we have a breakout. Okay, it signals a potential trend in that direction. For example, let us look for a very good example, right? Okay, for example, if price breaks below the Bollinger Band, as we can see here, you can see how price pierced, the way the price pierced through the Bollinger Band, it's as if the Bollinger Band and the candlesticks are on the same line. Can you see? As if they are on the same line, literally. They are along the same line. So we had a breakout here. So when you notice something happening, unlike the normal movements of the candlesticks, whereby you have price bouncing between the upper band and the middle line, the upper band and the middle line, in the upper channel, or you have price bouncing between the lower band and the middle channel, and all of the lower band and the middle line, in the lower channel. In this case, you will see price piercing through either the lower line or the upper line. So in that case, we have a breakout, right? So it can signal a potential sell trend, or it shows that there was actually strong bearish momentum at that point. So in that situation, if you are a breakout trader, you can enter a sell immediately after you identify that breakout. And then once you notice a bullish candlestick pattern, you quickly exit your sell. Okay, but then if it was a bullish breakout, in the case of a bullish breakout, let us see if we can find such. Okay, we can see we had a bullish breakout here. So you just enter a buy trade after you spot the breakout, then you exit once you notice a bearish candlestick pattern forming. Okay, so basically that is it. Now, to set up the Bollinger Band breakout strategy effectively, here are some key tips. Right, these are just some tips. I just want to share some tips that can also, enhance the strategy. Okay, so you can confirm with volume. Let us just add on the volume indicator for the sake of confirmation. All right. Now, one thing to note with breakouts is that breakouts are usually accompanied by increase in volume. Okay, so we can see now that when we had a breakout here, can you see that there was an increase in volume? Look at this spike. Look at this. So we had an increase in volume after this breakout happened. That was a signal, or that we can consider that a confirmation of the breakout because it validated that breakout, right? Now we can look at the second example. Let us look at the first example. Can we see the spike in volume? You can see it for yourself. You can see that there was a spike in volume during this breakout. So that showed that this breakout was actually valid. Okay, so the volume indicator can just give us a confirmation of the breakout, and then you enter your sell or your buy accordingly. You exit once you notice a candlestick pattern in the opposite direction. All right, and then you can also decide to combine with other indicators of your choice. Okay, not only the volume indicator, you can actually use RSI or MACD or any other indicator of your choice to confirm the breakout. Okay, it will give you a clearer picture and reduce the risk of false signals. Now, importantly, always have a stop loss in place, all right, to protect your capital. So, for example, when you have a breakout, please set your stop loss above the middle line, okay, above the SMA, the middle line. Set your stop loss above. That is for a sell. Then, as for a buy, when you have a breakout, please set your stop loss below the middle line, okay, or below the SMA, the middle line of the Bollinger Bands, okay. So you have to protect your capital. It's very, very important. All right. So now, remember, while the Bollinger Bands breakout strategy is a powerful strategy, it's important to practice and refine your skills. Okay. Consider backtesting on demo accounts. Backtest the strategy on a demo account to see how it fits your trading style. Note that profit is not guaranteed. Okay. So do not expect a particular profit when using the strategy, because profit is not guaranteed. There is no strategy that is foolproof. Okay, so in as much as the strategy is effective, it doesn't mean that past performance is going to guarantee future results. Past performances do not guarantee future results. Okay, so make sure you observe good risk management. Make sure you use good risk to reward ratios so that you do not end up losing more than you can afford. All right, it's very important. Now, if you found this video helpful, don't forget to give it a thumbs up and subscribe for more trading insights. Share your experiences with Bollinger Bands in the comments below. Happy trading and see you next time.